Thank you for joining this investor update today with Hexagon Energy Materials, ASX listed HXG. Hexagon is rapidly progressing a large-scale, low-emissions ammonia export project here in WA. And we have the pleasure of presenting today the CEO, Stephen Hall. Stephen is a former senior executive at Woodside and leads one of the most impressive teams that we have seen at the junior end of the market. They have decades of experience building large-scale energy projects here in Australia and marketing and selling billions of dollars of LNG to Northeast Asian customers, so very well credentialed. Stephen is going to run through some slides for about 15 to 20 minutes to update us on Hexagon's recent progress. There is a Q&A opportunity. There is a chat function on Zoom, so if you want to ask a question, please do enter that into the chat, and we will get them to Stephen at the end of his formal presentation. So thank you, Stephen, for joining us here today. Very much looking forward to hearing your update.
Great. Thanks for that, Aidan, and welcome to everybody on the call, and thank you for your interest in Hexagon. The slides I'm going to be walking through today are all available on Hexagon's website. And before we start, I'll just draw your attention to our standard disclaimer, which is shown here. This slide summarizes the ground we're going to cover today, and it's also the reason why there's a building sense of excitement within Hexagon. So at Hexagon, we're an ASX-listed project developer, as Aidan alluded to. We're focused on delivering our WAH₂ clean ammonia project. There is a clear and increasing need for clean ammonia globally to help the world decarbonize. And our project, WAH₂, is the best placed project in Australia. It offers attractive returns and growth potential. And we see multiple midterm catalysts for revaluation as we approach feed entry at the end of Q3 this year. So the fundamental market opportunity is around ammonia playing an essential role in the energy transition. It's increasingly recognized as the pragmatic choice for decarbonisation, and it doesn't have the handling and transportation challenges that hydrogen does have. Particularly relevant to Hexagon and WAH₂ is Japan and Korea's need to have clean ammonia to replace coal in their power stations. And also the shipping industry needs to decarbonize itself, replacing diesel and fuel oil with ammonia to help decarbonize Australia's exports of iron ore. And I mean, without beating around the bush, huge demand is forecast. Japan alone is expected to require 20 million tonnes of clean ammonia by 2035, and that is more than 30 times the annual production that we're going to get from phase one of WAH₂. This demand growth is being driven by government support. So, for example, in Japan, the Japanese government has set clean ammonia import targets, and it's allocated the equivalent of $60 billion to support the establishment of clean ammonia and hydrogen supply chains. Now, this includes subsidies to incentivize potential producers like Hexagon. The Australian government has also been active to stimulate the development of supply, recently allocating 140 million towards the Pilbara hydrogen hub. Now, that's where our project is located. That money comes half from the federal government and half from the WA state government. And you've probably seen that in the latest budget, the federal government announced a hydrogen production tax incentive and that's been the subject of a recent consultation paper with industry. So Japan has set very clear criteria for potential suppliers, and Hexagon meets or exceeds each of those criteria. So in terms of emissions, Japan is technology agnostic. So what that means is they no longer really talk about green or blue or any other color of hydrogen. They're very much focused on what is the emissions intensity. And in fact, they've set a benchmark for that emissions intensity. And you can see on the slide that our project is substantially below that benchmark. And in fact, we have further opportunities to bring our emissions lower than that. In terms of cost competitiveness, in this context, competitive means between $500 and $600 a ton of ammonia landed or delivered into Japan. Our cost of supply at the time of our pre-feasibility study was $550 US a ton, and we had a target of 500 a ton, and we're well on the way to reaching that target. I should note actually that these costs of supply, so the 550 and our target of 500, they do not include any government incentives. So any government incentives would be upside, if you like, on top of that. In terms of supply security, Australia is recognised as a secure source of supply and is seen as a key part of Japan's supply portfolio for clean ammonia. So Australia is going to be playing a part. And then when we look at the Australian landscape, it's clear to us that WAH₂ is the best placed Australian project. And I'll explain a little bit more about why that is the case later. The concept behind our project is simple and deliberately so. So WAH₂ will use established technology with no technology risk to decarbonize gas and produce clean ammonia. We'll capture the CO2 associated with the process, and we transport it via pipeline to a nearby sequestration site where the CO2 is stored permanently underground. And then the clean ammonia will be transported by pipeline to the port of Dampier for export or for use as a bunker fuel. And our plans are to have material volumes of 600,000 tonnes per year of clean ammonia online before 2030. We're focused on delivering the fastest, lowest cost and lowest risk pathway to production. And I'm pleased to say that our strategy to do so is proving successful. So firstly, securing a site in the Maitland SIA, Strategic Industrial Area. Embracing the simple project concept that I described on the previous slide. Working with established players in all aspects of the project. And leveraging existing infrastructure wherever we can to reduce our costs. Our project site is a key asset that underpins the competitiveness of our project, and it's shown as a black dot within that purple polygon on the map. We're immediately adjacent to gas supply and to an existing infrastructure corridor that provides access to the existing deepwater port of Dampier, which already handles ammonia and can take our production without any expansion. The infrastructure corridor also provides us access to 2 nearby CCS projects. And I'm pleased to report that we've been able to secure water supply from nearby, and we're also pursuing further opportunities to share infrastructure in the area. We have the right people to deliver the project. You can see on the slide that we have a highly experienced board. The project leadership team has over 80 years of experience in developing and delivering energy projects. And the majority of those have been in joint ventures with multinationals and Asian counterparts. And of course, we're supported by industry-leading technical experts in terms of Petrofac leading our engineering and Topso providing the fundamental technology for our project. This is why we believe that our project is the best placed project in Australia. And it comes down to the technology choices that we've made and our choice of location. Of more than 140 projects in Australia, hydrogen projects in Australia, there's only 30 that are targeting clean ammonia. And the large majority of these are electrolysis based. And so what that means is that they face considerable cost and schedule challenges relative to our project. And in fact, only 5 projects are based on gas reforming with CCS. And of those, we are the only one with access to an existing deep water port and with multiple CCS projects nearby. So we are literally one of a kind. We've been making excellent progress and we remain on track to start feed at the end of Q3 this year, I should say. Much of our pre-feed technical work has already been completed and we're in active negotiations progressing key inputs and partnerships. As the results of these become announceable, we do expect a series of agreements to be announced, which will de-risk the project economics and in turn allow a re-rating of Hexagon's valuation. This slide provides a little bit more detail on the substantial progress that we've made since the PFS. I mean, the key takeaway is really that the results to date have significantly reduced uncertainty and they're suggesting improved economics relative to our base case. To pull out a couple of highlights, we've removed CapEx from our base case and simplified our approvals by removing a dedicated desalination plant and the associated pipelines. And that's thanks to the water supply key terms agreement that we've executed. We've replaced the assumptions we had at the time of the PFS with third-party indicative pricing for key aspects of the project. So not just water, but CO2 transport, CCS and the like. And we now plan to tariff our CO2 through a third-party pipeline rather than by building our own. And of course, that further reduces our CapEx. We'll be progressing WAH₂ with equity partners, and we expect them to hold around 2/3 of project equity from feed onwards. So Hexagon would have about 1/3. Management is focused on progressing with the minimum dilution for existing shareholders, and you'll have seen that in the way that we structured our recent capital raise. It was a convertible note that references future share prices to allow Hexagon to achieve a higher effective issue price from any higher valuations after re-ratings as announcements are made. And it also guaranteed a minimum conversion price. So to wrap up, I'm excited and the people I work with at Hexagon are excited. And the reason is that there's a clear and increasing need for clean ammonia. Clean ammonia produced using gas and CCS is increasingly seen as the credible source of supply. And Hexagon's project is the best paced project in Australia. It offers attractive returns and significant growth upside. And as I mentioned before, we see near-term catalysts for evaluation as we progress towards feed. I'll leave it there, Aidan, and leave time for questions.
Thank you, Stephen. I was busy scribbling down some questions that were coming through while you were speaking through there, so apologies for that. Yes, so just a reminder, there is a chat function on Zoom that you can type questions into, and I'm going to start off with a couple, so if anyone's got any more, put them in and we'll get to them at the end. So maybe someone you met some time ago, you discussed in the presentation market opportunity and some of the recent developments for your low emissions ammonia project. How much more or less optimistic are you today than when you met 12 months ago?
I'm considerably more optimistic. And the reason is that there's increasing demand for clean ammonia. The plans to use it to displace coal in power generation are getting clearer, and the shipping industry is getting much more serious about decarbonisation with clear targets set. There's also more active government support for projects like ours in Australia. And if we step back a little, there's also increasing uncertainty in other potential suppliers of clean ammonia, like in the US, where the Inflation Reduction Act is looking less certain than it was, particularly if there's a change of government at the next US election.
Thank you, Stephen. Just getting to the next one now. Again, something you touched on in the presentation, but maybe given all the news recently on green hydrogen, could you touch on what you see as the key differences between exporting hydrogen and ammonia, and obviously why you've gone for the latter?
Sure, and I think people's thinking has evolved here. So 2 or 3 years ago, when we were talking to potential customers overseas, it was a fairly balanced conversation, if you like, between hydrogen and ammonia as the product that might be required. But as the issues associated with hydrogen storage and transport have become clear, I mean, effectively, you either need to compress it, and it's still not very energy dense, or you need to liquefy it, which is very energy intensive and expensive. And so what that means is that hydrogen is best used locally. But if you're looking at any sort of long distance transport and certainly export, then really the conversation is now all around ammonia, because it doesn't have those same transportation and storage difficulties.
All right, thank you, Stephen. Reading here, with the market outlook positive, competitive positioning strengthening, what do you see, as obviously you're a ASX listed company, what do you see as the key revaluation points for the project and obviously the shares moving forward?
I think fundamentally it boils down to the announcements of commercial agreements and the completion of technical work as we move towards FEED. FEED is the point where the project becomes significantly de-risked, and that should flow through to revaluation.
You recently completed a funding round, which was well received. What's the funding outlook and requirements to get to those next stages, starting off with FEED, and how do you see that developing?
So our funding to FEED is in hand, and as you say, we recently raised $1 million via a convertible note. we expect to farm down at feed entry, so that's down to around 1/3 equity. Our share of feed costs, I expect to be between 5 to 7 million. Obviously, that depends on the final equity that we would end up with, and we would fund that 5 to 7 million from a combination of partner buy-in contributions, with the balance made up via a capital raise.
Right, thank you, Stephen. There's 2 more questions, so I'll get through them quite rapidly. So if anyone else has got more, please do put them into the chat. So a question here on the bunkering opportunity. So you've moved from not just focusing on export, but also looking at the bunkering. What's the scale of that opportunity?
It's large and exciting is probably the headline, but let me explain why. So globally, shipping emits a lot of CO2, and the IMO, the International Maritime Organization, have set very clear targets for CO2 reduction, and that's a 40% reduction by 2030 and a 70% reduction by 2040. Those are their stretch targets. 800 million tons of iron ore is shipped from Australia annually, and 90% of that 800 million tons is shipped by companies that have committed to net zero. So there's a very significant shipping trade, almost all from the Pilbara to Asia, that needs to decarbonize. If those ships, the bulk carriers, were to use clean ammonia rather than marine fuel oil or diesel, they would reduce their emissions by 80%, 80. So you can see that the emissions reduction potential is substantial, and the scale of the opportunity is substantial. And what's really attractive from our point of view is the Pilbara is absolutely the best place to decarbonize our iron ore exports. It's close to a source of supply for clean ammonia, and if you like, it's the hub in the wheel of the iron ore trade. So all the ships, wherever they take the iron ore, come back to the Pilbara to pick up the next load.
A question, Stephen, on gas supply. How do you see that getting secured, and where are you in terms of those discussions?
We are in active discussions with multiple existing gas suppliers. I'm increasingly optimistic. As you may recall, we require 55 terajoules a day of gas. We expect to source that gas from a number of suppliers, maybe 3. And so no individual supplier would be supplying the whole amount, but we'd be looking at packages of sort of 15 to 25 terajoules a day. And that's those sort of volumes fit well within the suppliers' portfolios.
A couple of more questions coming through, related perhaps to the next stages of the project. But in terms of partner, when do you foresee the introduction of a larger partner to the project?
We anticipate as we enter feed. So prior to feed entry, we anticipate partners on board by then. And
then sort of related, the final question at the moment, it's offtake. When, again, in this development process, do you start talking publicly about offtake?
So we are negotiating privately about offtake as we've reported before. We expect to be able to have public news about that, again, supporting FEED. I mean, maybe a helpful way to look at this is, in order for Hexagon to support its decision to enter FEED, we need to have comfort on the key aspects of the project. So what that means in practice is we need conditional commercial agreements in place for the key aspects of the project: gas supply, CO2 transport, CCS, offtake, and of course participation in the project. And these agreements, many of them have linkages between them, with, for instance, some offtake partners interested in equity, some gas suppliers interested in other aspects of the project. So there's that's why all of these things are being matured in parallel towards our FEED entry decision at the end of Q3.
Another question's just popped up. Well, actually, it's in terms of management, including yourself, incentives to deliver the project. What are they currently, and what will they be? Just to get alignment.
They're the subject of active discussions with the board at the moment. So I'd rather not comment on specifics at this stage. But what I would say is Hexagon recognises the need for the interests of management to be very closely linked to the interests of shareholders.
Thank you, Stephen. I think I've done all my reading of the chat comments, so back on video. No more questions, so I'll probably end with the one I always end on these calls, which is what are the key milestones? Assuming everyone on the call has now got you on their watch list, what are the key milestones for investors to be looking out for in the coming months as you progress the project even further?
Essentially, it's keep your eye on the news flow over the next 3 months as we march towards FEED entry. We will announce things as soon as we are able. I just can't tell you exactly when that's going to be. So I'd ask that you keep us on your watch list and keep your eyes open.
Yeah. So FEED is not that far away. So we'll basically
we're talking about a few months.
Yeah, great. Now we look forward to obviously getting you back for another investor update upon that announcement. That will be obviously a huge event for the project and the company. And Stephen, that was a great run through. It's very exciting. And as I said, it's only a couple of months till we get you on again with more exciting news. So thank you, Stephen, for that. And thank you everyone else for joining us this morning. If there's any follow-up questions, please do send them through to us or directly to Stephen, and we will get back to you on them. Thank you.
Thanks very much for your time, Aidan, and thank you everybody for showing the interest in Hexagon.